Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 15th, 2021. I want to talk about a quick market recap for last week and also what to invest in next week so that way we can be ahead of the game. So with that, let's quickly talk about major news last week impacting stock market and then look at what we can do. So first, inflation. So it's all about inflation. So inflation worries kind of rocked the market last week. We had up and down market, couple days down big time because of inflation worries. Then market went up. And one more major news is really the Colonial Pipeline. They resume normal operations. Looks like they had a cyber attack. Company shut down a lot of pipeline here, 5,500 miles of pipeline, and they also paid almost $5 million to as a ransom for cyber criminals. That's a huge news. That's why you see most of the energy stocks going up because of the shortage. And also CDC, they kind of removed the mask guidance policy. That's why a lot of people are worried, a lot of people are excited. So it's a really mixed news here. And a lot of these retail players, even like Disney and Wynn Las Vegas Sands, they all released their mask policies. And I also see a lot of the retailers are really paring back on their mask policies. We have to watch very carefully with the Fed and their minutes here because April's hotter than expected consumer and producer inflation. I think that will kind of guide the market. If Fed is showing some signs of tightening, I think then it will impact stock market negatively. If rates go up, it will impact the stock market. Next, we got a lot of these earnings coming up, especially the major retailers like Walmart, Home Depot, Costco. We have to watch that very carefully. That will indicate whether consumers are spending or they are tightening up a little bit. And last but not least, we got various major notable earnings. We got companies like Cisco, Qfin, Agora, Intuit, even SLGG. All these stocks are having the earnings next week, and we got to watch very carefully. And some of these are very hot stocks. As example, Nvidia, Pinduoduo, Snowflake, Workday, Okta. Even advanced auto parts, it's known to go up and down wildly. I think we have a lot of these cloud players also next week. We will watch very carefully. I think if we see some signs of a slowdown or even stock depreciating, we will wait for a little bit and bounce on these stocks slowly as they show some progress. So with that, let's go into a quick recap, from last week and what we can do for next week. From a major trend perspective, last week we had energy stocks up. Think about Peabody Energy, Range Resources, YPF, Kinder Morgan, Schlumberger, and even Valero. And gold stocks are up nicely. We got GFI, Newmont, RAN Gold. You can go through this. I think it's good to look at the gold stocks as a hedging strategy. I know many investors out there are a little bit worried about the high growth stocks like cloud and software plays. That's why whenever these energy and gold stocks are a little bit showing some signs of weakness, or even at this point it may be okay to buy a little bit of these stocks so that way you hedge against your portfolio a little bit, and that way you have some peace of mind. Then we got airline stocks like Alaska, and American Airlines, LUV, AAL. All these are doing nicely. I think that's a good sign. Economy is opening up. That's why these stocks are doing well. And then we got consumer staples like Procter and Gamble, Tyson, Colgate Palmolive. They're all doing nicely, mainly because consumers are really buying of late, and that's why it's moving these stocks up. We have financial stocks, Charles Schwab, Citigroup, JP Morgan. Many of these stocks are beneficiaries if Fed increases the interest rate. That's why these stocks are going down. So far, interest rates are so low these banks could not make too much money on your deposits, but that might change if Fed increases the rates. That will also impact negatively on the stock market. And we got cybersecurity stock. They're all up after ransomware attack. You can look at CrowdStrike, my favorite stock, even CyberArk, McAfee, INTZ, FireEye, Qualys. And some of the 3D printing stocks are up nicely. Think about DDD, Desktop Metal, Faro. And many consumer cyclical stocks are also up nicely. Think about IGT, Party City, Peloton, and so on and so forth. And from a downer perspective, stocks that are down, we got fintech plays like Encino, Square, Mercado Libre, Green Dot, PAGS, and STNE. I think many of these stocks I love them. I will be buying them on slowly on as they kind of show some signs of progress. I think it's good to invest when the stocks are down as a counter trend strategy and do it slowly, no need to rush. And many of the crypto stocks are down. Think about Marathon, Digital, Riot, Blockchain, Canon, MicroStrategy, and BTBT. I think these are also, slowly start nibbling a little bit because these bitcoins they trade very widely. You got to catch them when they're low. Cannabis stocks are down. We got VFF, Hexo, Tilray, Omnigram, CGC, which is Canopy Growth. I think some of these it's good to just slowly nibble as they go down and hold it for a long time. And some of the favorite electric vehicle stocks are down. Think about Workhorse, Tesla, FUV, Solo, Ride. I'm nibbling Tesla slowly a little bit so that way I can add to my position. And many of the cloud stocks are down big. Think about Wix, Trade Desk, Audio Eye, Calix, Apps, which is Digital Turbine, Bill, and Baba. I've been, adding to my position slowly with stocks like, Apps, Bill, and Baba, so that way, I can accumulate them slowly. Even TTD and Wix are also good. Solar stocks are down big. Think about Array, Sunworks, Nova, even bigger names like Enphase Energy and Solar Edge. I think these are also good to buy slowly into this weakness and hold it for a long time. And few big data names are down. Think about AI, which is C3 AI. This stock looks like it's really not catching a break, going down on a day-by-day basis. I think this will start making some good consolidation range as it shows some signs of progress. I'll be a buyer of this stock. Great company with Tom Siebel's leadership. And we also have stocks like Domo, Cloudera, Splunk, Alterisk. I think these are also as they show some signs of stabilization. It's good to buy some and hold it for a long time. And last not least, we got pet care stocks like CVET, Lemonade. They're into insurance. Zomedica, PetQ, Chewy, IDEX. I'll be buying some of these stocks, especially stocks like IDEX, Chewy, and even Lemonade for that matter, and also CVET. Slowly, but by a little bit at a time. So with that, let's jump into earnings update. So we have a lot of earnings and positive side and negative side. Example on the positive side, we got Norton LifeLock stock surges. It's a good play. I would wait for this to cool off a little bit. It's a good stock into consumer side of the security. I would buy a little bit. And I love Callaway Golf. The stock jumps. It's a good stock as the even now with the shutdowns, even last year, these golf companies have done nicely because people want to go out, and they will offer a lot of growth here because golf course is wide open. You can easily maintain 6 feet distance. That's why it's a great stock to buy. And then we got, Airbnb. I think this stock is always good. Folks will not go back to old way of staying in hotels because, Airbnb offers much better bang for the buck. Then we got DoorDash. CEO talks passionately about how he kind of started the company. He was an immigrant. He used to work in a hotel, restaurant. So I think it's a good story. I think I'll be buying this stock also on any weakness. And Coinbase looks like they did very well. Revenue tripled. As the stock becomes a little bit cooled off, I'll be buying Coinbase also. It's a great stock. Then we got Wendy's. Wendy's, it's a good play. Their quarterly earnings, you got to watch out. Normally, they drop after the quarterly earnings, but this time I think they raised their forecast. I think it's showing some signs of good progress. It's a low dollar stock. It's a good play. Then we got Palantir. They report nice growth. And I think right now it's a low dollar stock. Looks like Kathy Wood is also loading up on Palantir stock. I think it's a good one for long term. And then we got Electronic Arts. It's a good play into video game. Their earnings and revenue decline. I think it's good to buy some on this weakness and hold it for a long time. Then we got on the negative side, we got Array Technologies, which is a solar stock, down big time, even below the IPO price, and they also withdrew guidance. Some of these things, it's good to buy a little bit. Don't buy a lot. On this bad news. It also looks like CFO probably is exiting the company. I think it's good to buy a little bit as a speculation as these stocks tumble drastically. Then battery startup QuantumScape, they post a bigger loss. They got a lot of things going on here. They're working with Volkswagen. I think it's maybe okay to nibble and buy a little bit with this bad earnings. Then we got space tourism company Virgin Galactic. They post wider Q1 loss. I think they are also talking about pandemic still crippling the business. I think it's okay to buy this company a little bit. Very speculative company. I think it's okay to buy a little bit and hold for a long time. When they go up big. Then you got Trade Desk. They announced a 10-for-1 stock split. I think even after that, stock came down. I mean, they did nicely from a revenue expectation after the earnings. I think company came down. This company also trades widely. It's good to catch when they're down and hold for a long time. I think it's a bet into cloud-based advertisement. I think they will do well. Then we got optical and photonics company LITE Lumentum. Their technology goes into Apple phones and multiple communication chip segment. It's a good stock. I think they came down. Good to buy a little bit on this weakness and hold for a while. Then we got luxury goods play Real. They post a quarterly loss. And also we have other stocks like Poshmark and some of these stocks which came down very badly. It's good to buy some of these luxury goods and second-hand place. Things like Poshmark and even other stocks. Because they're down big these days. Then we got Disney. Disney, what can I say? It's a great company, but they had some issue around streaming slowdown, missed subscriber expectations. I think it's good to buy this company for long term and hold it. Then we got cannabis stock, Aurora Cannabis, plunged big time. It may be okay to buy a little bit as a speculative play and hold it for a long time. So with that, let's jump in and look at some of the major trends in the market and what's going on. So all these charts are from Thinkorswim, from TD Ameritrade, and this is a 3-month chart, 1 day, 3 months chart. As you can see here, stocks have been doing nicely. This is a big S&P 500 futures, and futures, I think last week they dipped big. They came down big with the inflation worries. I know most of the investors are worried a little bit about this, and after that they did nicely. I think last 2 days, Thursday and Friday, they did nicely. I'll be watching out a little bit, especially this inflation, the CPI and PPI, consumer price and producer price. See what Fed will do, because Fed is going to look at these numbers. In the beginning they said it's a temporary, but if they get some indication it's not temporary anymore, they might raise the rates, which will in turn impact negatively on the stock market. And same story with the Dow Jones Industrial Average and Nasdaq. Nasdaq, as you can see, is a little bit weaker of the pack here, especially because big Nasdaq names have gone up so much last year. Russell is showing some nice signs of improvement. These are all the Russell 2000 a little bit smaller cap stocks. They've done nicely. Typically these big boys like ES and YM and NQ, they will take a cue from RTY many times, or the lower cap stocks. Then we got bonds. Bonds are doing a little bit nicely. They're thinking Fed may increase the rate. If the Fed increases the rate, business as usual. Bonds will kind of they will it will help them a little bit, and that might increase some of these bond prices. It depends. If the Fed is increasing the rates, bond might crash. As you can see here, there are some inflation worries. Bond came down, and the rate went up. If now the Fed says, what, we'll if you will increase the rates, I mean, they may not say that, but if Fed increases the rate, bond will again come crashing down, and the TNX, which is the interest, the yield will go up. Then we got crude oil. Crude oil, I think it's showing some signs of progress here, especially with the pipeline issues and the ransomware attack. Then we got gold. Gold is trying to stay kind of trading range here. Not too much progress, but last 2 days it went up. And then finally, not least, the dollar itself is kind of showing some signs of deceleration. If the dollar goes down, that's a good news for energy, gold, and even bigger stock market like multinational companies. So with that overall, I think we didn't do much last week. Inflation worries, market came down. Then some positive news, market went up. So overall, a little bit negative for the market. So with that, let's jump into a major ETFs here. It follows similar trend here. I will not go into too much detail. All the stock indices like ETFs like SPY, DIA, QQQ, and even IWM. Couple days in the beginning came down big because the inflation worries. Last 2 days they went up nicely, but still down for the week. And then we got TLT. TLT, it's again bond play, came down big with inflation worries. Then it went up because, last Friday it went up. And as you see here, gold, I think it's showing some signs of strength here. People are doing some hedging play, buying some gold, because in case Fed increases the rate, if stock market comes down, stocks like, the gold will go up, and even consumer staples and XLU, these, especially consumer staples will do well. XLU is a different story because if the rates go up, people might go and buy some of the interest rate bearing, even some of these bonds versus XLU. I think we have to watch out XLU carefully. And then you got technology, as you can see here, down big, and then they try to make their way up on Thursday and Friday. Semiconductors are really down. All the shortages are taking into effect here. I think this is one thing to watch out for. I think they did nicely on Friday, but it's good to watch. Semiconductors, a lot of shortage in the auto industry and semiconductors in general. So that's going to impact how much these folks can do. Then we got XAR. Think about big defense stocks like Lockheed Martin, Northrop, even Boeing. I think they are also following the bigger trend here. Down big, then went up a little bit. XLE Energy. Energy is a good play, I guess. Right now they went up on Friday, as you can see here, and they were down a little bit earlier. And we got retail. Retail is showing some strength here, and IYR housing market, I think it's also showing some strength. XLF financials, they are the beneficiaries of this Fed, rate increase, so that they have done nicely. And XLI, big industrials, are also catching fire. So with that, let's jump into major S&P 500 futures and the skew. This is a 5-year chart, as you can see here. One thing I always mention is really watch the skew. If the skew increases anywhere above 145, you better watch out. For example, skew was 159 here, and as you can see here, stock market was doing okay for a while, but then it took a big dive. So skew will give a heads up to you maybe a couple of weeks or even a month or two earlier. Hey, watch out, don't buy too much long positions, and look at some defensive hedging strategy. And again, somewhere here, as you can see here, it went above 140 or 150 almost. So as you see here, you got a week or two heads up here, then stock market came down big. So it pays, well to look at this skew, how it's going. If you see skew going up drastically, be careful. Buy some of these hedging strategies like gold, and even some of these, consumer staples and defensive plays. And as we see here, same story here, it kind of went up here, stock market took a dip. And again, last week also it went up, above 145. Now we are taking a beat. Now it's showing, now it's below 140. It may be okay. Next week I don't see too much drama barring, Fed interest rate policy. We'll see how it goes, but at least it came down a little, the skew came down a little bit, which is a good story. So with the VIX, I think it's at this point right now it's not an issue. VIX is low. It may be okay to buy some VIX call options longer term, 3 or 4 months out, because there will be some of these Fed inflation worries that will send the VIX up once in a while. So now we look at the bond itself and the interest rate and dollar. As you can see here, bond is now trying to go up here because people are thinking, what, interest rates may not go that much up. That's why bond is kind of going up and interest rate or the yield is coming down. Next week, if Fed makes some statement about interest rate, bonds can go down, and along with it, it will take stock market down. But TNX, the interest rate can go up. And DXY dollar itself, as you can see here, it's kind of showing some signs of weakness. That's a good news for commodities and stock market in general. So these are the major stocks here. They kind of follow bigger ETFs, as you can see here. Microsoft came down big, went up last 2 days. Same story with Apple. Amazon is a little bit softer, I guess. We got to watch out a little bit. And I think this one is a good one to buy on long term. And we got Facebook. Facebook is again a rocket ship. They're doing nicely. They did a little bit badly, but now they're coming back. There is some worries about Apple's privacy and the new iOS release, where consumers have to opt in, to have some of these Facebook's features. That's a little bit worrisome for Facebook. I'm sure they will go about this and do something creative. Google is a nice stock. I think they've done nicely last week. And Netflix, I think they are still trying to stabilize here. I think it's a good one to buy, below $500. This Netflix will do well. They got a very good leader, Reed Hastings. Then we got Nvidia. Nvidia, good to watch out because earnings is coming next week. Good to watch out. They got a great leader. I think stock will do well. I'll be buyer, a little bit into weakness and hold for a long time. J&J is doing very well. I think their vaccines play is doing nicely now. People are taking J&J vaccines. I think that's a good one. Steady Eddie type stock. Nice dividend also. PayPal, I think, they've done nicely last year. Most of the fintechs, same story here. PayPal, Square. I think now they're, kind of deciding what to do. I would be a buyer of this PayPal into this weakness, buy slowly, hold it for a long time. Healthcare insurance stocks are doing nicely. As you can see here, some weakness here. UNH is a great stock. I would buy this on weakness and hold it for a long time. Merck is showing some nice strength here. As you can see here, they did very badly last month. Now they're showing some strength. It's a great stock. I would buy this on any weakness. Medtronics is a good stock. I think it's into medical devices and elective surgeries. I think this stock will do well. Good to buy on this weakness. Then we got JP Morgan, Berkshire, Visa, and even all these stocks with the reopening going on, and also interest rate potentially the inflation worries. These stocks should do nicely. And then we got Home Depot here. Home Depot earnings coming up next week. I think it's gardening season coming up. It's good to buy the stock also in a weakness, and same story with stocks like Lowe's. It's also good to buy Lowe's on this a little bit weakness. Now let's look at major ETFs. As you can see here, we got the way I sorted this is really we got 1 week performance here. The stocks, the ETF that you see at the top, these 4 or 5 of them, they've done positive for 5 day, which is last week. And remaining ones, as you can see here, they've done a little bit negatively for 5 day. It doesn't mean they're bad, but they're taking a little bit breather here. With that, as you can see here, the hedging or the little bit consumer, defensive plays are doing well, like the gold, XLP, XLF, and even dollar, materials. Typically when the stock market is worried about, things like inflation worries, that's when the money will flow into these a little bit stronger defensive plays. That's what you see going on here. And also I highlighted few rows here in bold because these have done nicely. Consumer staples, they've done 27% for 1 year, 189% for 10 year. Financials have done nicely. XLB, XLU, same story. And my favorites here, things like IWM, QQQ, SMH, even XLI. Anywhere you see 10 years above 100%, generally, these are pretty stable ETFs. You could, buy them on the weakness and hold it for a long time. And many of these ETFs, if you don't want to play stock, buying, selling game, you could buy some of these ETF because they got low expense ratio. You don't need to worry about any slippage and you could hold for a long time. And watch out, as you can see, some of these XLP, they're just 1% down from 52-week high. XLF, they're just 0.90% down from 52-week high. So when you buy something at the 52-week high, just watch out. You don't want to buy too much. Instead, I would wait for a little bit pullback. For example, we got, if you see some of this here, minus 20, TLT, minus 18, FXI. When some things are down like this, it's a stable ETF. It pays to buy a little bit at the time. And one more thing I also do is, when you look at some of these stronger players or even weaker players, look at this ETF and see what are the stock holdings, major stock holdings, and you could buy some of those also instead. Now let's look at ETF winners. As you can see here, you got a bunch of these here. ETF is, the cryptocurrency is doing well, Ethereum. And then we got, as you can see here, Europe is doing nicely, regional banks, oil is doing nicely, no surprise there. And you can go through this slowly. Gold is doing nicely. So this is where you can take a cue on where the market is trending. If you see some of these ETFs doing well, especially gold and oil, gold, it tells you folks are a little bit worried about stock market. They're going into some defensive place. Now let's look at what's ETF loser perspective. The actual Bitcoin itself is a little bit losing out right now, and we got blockchain, which is stocks, blockchain stocks, which are into cryptocurrency. They're also going down. Taiwan is going down, and even cannabis, it's also down. Kathy Wood, her favorite cloud, and some of these next generation plays, it's down. Ethereum, as you can see here, a little bit down here. Fintech down, copper down, and genomic, human genome stocks are down. So you get an idea. You could look at some of these ETFs and look at some strong players and buy them on this weakness. And also watch out, when you look at ETFs like GBTC and even dry bulk shipping, they got a high expense ratio. Anyway, anytime you see expense ratio, above 1%, watch out because there is some slippage involved. So you got to be a little careful, especially things like, Bitcoin, bulk dry, and even one here, Ethereum. You got to be watching out because you don't spend too much money in this slippage. That will impact your long-term growth. Now let's look at small cap weekly winners. We got a couple this year. I also highlighted some in bold here with the positive sales growth. Same story here. I highlighted the stocks with the 1 week positive performance here. You need to watch out a little bit because you don't want to buy them on a high note. Look for some pullback and then buy. And if stock is really pulled back real hard from 52-week high, look at things like AUPH and even one here, Epizyme and FLDM. Some of these, if they're showing some signs of improvement here, they're down big from 52-week high. It may be okay to buy a little bit, but the typical thing I will do is I will look at how it's doing 1 year, 6 month, 3 month, 1 month, 2 week, and 1 week. If they're big 2 week and 1 week, I would not buy too much at the time. I will wait for a pullback. But if they're showing some signs of weakness in 2 week, 1 week, then I will buy slowly. For example, here KPTI, it's shown some progress in 1 week, but 1 day and 2 week and 1 month they're down. So this is where stock is showing some signs of improvement here because 1 week it's up and 1 day they're down. This is where you can buy some little bit because trend is upwards. But if the stock is big like this, 1 day and 1 week, then you want to wait a little bit for a pullback and then buy. And my favorites is always looking at the big time losers and then see is how is their revenue doing and how are they doing from a weekly, monthly, 1 day, 2 week basis, and then nibble the stock a little bit. As an example, Rector here, they've done very badly for 1 week and 2 week, all the way to 3 months. They've done nicely for 6 months and 1 year. As you see here, they're showing some signs of progress on Friday. They're up 8%. So when you see these type of things, what I would do is I would buy a little bit because at least there is some signs of progress in 1 day. It's too early to call. You got to be a counter trend trader to buy on this weakness. You could buy a little bit. It's a low dollar stock, and they got a sales of $12 million. They also have a quarter over quarter sales growth. So that's why, good sales growth, good gross margin, stock is down big, showing some signs of improvement in 1 day. So that's why it's okay to buy a little bit into this. And same story with, stocks like Array Technologies. They're down very big, as you can see here. They're down all along. So here, your strategy should be, hey, what, I don't know how stock will do. There are some bad news. Earnings announcement came out, CFO exit. So you could buy a little bit into this weakness and hold for a long time. So that way you don't expose yourself too much. You're not buying thousands of array technologies. Instead, you're buying a little bit and see how the trend will go. If they show some signs of progress, then you can buy more. And real again, I think they had some earnings, stock went down. So I will not cover each of them in detail. You can kind of follow the same methodology. If they show some signs of progress in 2 week, 1 week, that's when you can buy slowly. And I also highlighted some stocks which are positive sales growth here, like Village Pharma, Dynavax, CleanSpark. CleanSpark is one of my favorite plays, and also Sauce, Hexo, Woozy, and you can buy some of these because they got positive sales growth, and you can hold it for a long time. And as you look through this, there are some of these stocks here. As you scan through this, 1 day and 1 week, if you see some progress in 1 day and maybe 2 week, you could buy some slowly. Like Canon is again a good stock into cryptocurrency hardware business. Company has done I think 62% for 1 year. They are now down big time. You can buy slowly. Don't buy too much. Buy slowly, so that way you're not exposed big time. Then we got mid-cap weekly winners. As you can see the list here, I sorted it by 1 week performance. The one on the top has got very good performance. And some of these stocks like AMC, IGT, even 3D Play, 3D Systems have done nicely. And many of these stocks are down big time still, from 52-week high. For example, 3D Systems here down 60%, showing some signs of progress in 2 week and 1 week. I would probably wait a little bit for this to cool off because it's up so much in 1 week and 2 week, but it's a good play because 3D printing is going to go up in the future. And as you scan through this same story here, there are some good companies. Box, as an example, they're also down 11%. I think they're also showing some signs of progress here. Callaway Golf is a great company. Normally, I would like to see how they're doing. If they're up so big in 1 day, 1 week, I would wait a little bit. If they're not up that big, and then I would buy a little bit at the time. And Upstart Holding is also one of my favorite stock here. They're into fintech. As you can see here, they're not done much here, but it may be okay to nibble some of Upstart stock and hold it for a while. Perigo, I think they announced earnings. They did not do great. I think it may be okay to nibble a little bit. Same story with FireEye. Then you got mid-cap weekly losers. I look at this weekly losers very carefully, and some of my favorite plays are the weekly losers, especially mid-cap, because we know these are not as volatile as small cap. They have a little more earnings growth and a little bit higher market cap. It may be okay to nibble some of these plays. For example, Magnite here, one of the my favorite stocks here. They've done so badly, for 3 month, 1 month, 2 week, 1 week, and they also have a high short ratio, as you can see here. And they're showing some signs of improvement. It could be a little bit early to call, but I'm willing to buy a little bit and hold for a long time. And Bumble, it's a online dating stock. I think they're showing some signs of progress here. I would buy this company slowly. And I also like stocks like Marathon and SelectQuote also. And you can scan through this. I would look at some of these plays here. If you see some signs of improvement in 1 day, 1 week, and they're down big from 52-week high, and they're doing nicely from a sales growth perspective and gross margin perspective, you would buy a little bit. And Insmed, again, one of my favorite stock. Paysafe, I think at some time this stock is showing some improvement. I think they're up 4% for 1 day. It's okay to buy some Paysafe fintech play and hold it for a long time. AMWL, it's another good company. American Well, maybe it's okay to buy a little bit and hold it for a long time. Let's look at a couple more here. Large cap winners. As you can see here, there are a lot of these companies like Norton LifeLock, Peloton, even DoorDash. They've done nicely for 1 week. This is up, not down. They're doing nicely, but some of these stocks like Peloton still down big for from 52-week high. I think I would wait for this to cool off a little bit and buy and take it from there. You got to be a little bit careful to buy when they're so huge. But companies like Zoom, as an example, they're down big time from 52-week high. They're showing some sign of progress here. It may be okay to buy some stocks like Zoom also at this point. We got large cap weekly losers. This is, I also pay very close attention to these stocks. Many of these are good buys. For example, Trade Desk, as you can see here, down 21% for 1 week, and they're down 46% from 52-week high. Done nicely for 1 year. I would be buying some of these stocks. They did very good earnings, revenue increase. It's okay to nibble into this stock. They also have a stock split announcement. I think I will be a buyer of Trade Desk slowly and hold it for a long time. With the go-to stock, which is GSX TechDo, coming down drastically with a lot of negative press. If you want to look for a little bit safer bets, you could look at stocks like TAL and EDU down big time. okay to nibble a little bit slowly. Many of these online learning stocks have come down. Then we got Quantum Scape. This is one of those long-term players right now. Zero sales. Stock is down big time, and they got some solid-state battery technologies which might do well. A lot of alliances with the companies like Volkswagen. I would buy this stock also a little bit and hold for a long time. And same story with Pinduoduo, Square. Many of these stocks are down, as you can see, are big time. As you see some signs of progress, I would be buying this and holding for a long time. Right now, on a 1 week basis, they're all down, but as you can see, on a 1 day basis, they're showing some signs of progress. And you could buy a little bit as a contrarian or a counter trend trader. That will pay off very nicely. Then we got mega cap winners. I love many of these stocks. They're all great stocks. For example, we got here CRM, one of my favorite stock. Mark Benioff is the CEO, down 23% from 52-week high. And as you scan through here, Adobe is one of the great stocks. Shantanu Narayan, CEO. I think company down 9% from 52-week high. And as you scan through the Abbott Labs, great company, Facebook, and Cisco is showing some signs of progress. They're acquiring, companies with the many of these companies, going back to office work. Cisco can be a winner because they got a lot of these equipments ready to be deployed. And Microsoft and Oracle, good long-term plays. I would wait for a little bit pullback and buy them. Mega cap losers. I pay very close attention to these mega cap losers. Many of these are my favorite stocks. I've been buying slowly Tesla stock, into their weakness. Same story with Alibaba and Disney. All of these are great stocks. I would buy these stocks into weakness. I don't buy too much because many of these are in the same sector. As you can see, many of them in the technology sector. Buy slowly and hold for a long time. So with that, thank you very much. Happy investing and trading. Please subscribe to Raj Option Trading. Thank you.